All right, let's go through it. This is gonna be our first episode with like a presentation, so this is kind of fun. Let's get
No,
it.
remember being Doctor Doom, like
Yeah,
I have to cover my bases, right?
fair, fair.
All right, so on the first part, it's just the introduction. What's market manipulation?
Hmm.
On the second slide, market manipulation refers to artificial inflation or deflation of the price of a security. Also known as market manipulation or stock manipulation, it involves the literal manipulation of a financial market for personal gain. It means influencing the behavior of securities with the intent to do so. That's from Corporate Finance Institute.
Mm.
On the next slide, we're going to pump and dumps. So a pump and dump is a manipulation technique that is used frequently in order to inflate the price of a security artificially. The manipulator then sells out and the followers are left with an overvalued security. This works on stocks with micro-market capitalization. This is also from Corporate Finance Institute. Pump and dump schemes sometimes are classified as scalping. So on the next slide, I show the flow of a pump and dump. Essentially, the entity buys a security in silence, right? They don't say when they're buying. Then they tout the security publicly after buying, and the viewers and followers afterwards react by buying the security. And while this is happening, the person or the entity who touted the stock, um, they are now selling in silence, not saying that they're selling, while still touting it in some instances. So that's the basic breakdown of how pump and dumps happen. Um, then we're going to talk about pump and dumps in action, right? We need to actually show what we're talking about. So before we actually show graphical representations, there's some guidelines around pump and dumps. So they normally show price graphs that are parabolic in shape. So they normally have a bell shape. They show the 50-day moving average quickly shooting above the 200-day moving average, followed by a sharp and quick fall below it. So what you find is that the 50-day, it will shoot above the 200 and then it just drop right after the right afterwards below the 200. So prices, they have moving averages. 50-day moving average is basically the average price of the last 50 trading sessions, and the 200-day is the average price of the last 200 trading sessions. So they're basically just showing you how the price has moved over the last 50 days versus how the price has moved over the last 200 days. Normally, the 50 is more volatile than the 200 because the
Hmm.
200 is collecting more price points, so it will smooth out. But what it does is that not only the price chart is showing a bell shape, the 50-day also shows a bell shape. Um,
Okay, so and you're gonna show us like how the 50-day moving average moves versus the 200-day.
yeah, man, without a
Yeah.
doubt. And I'm gonna show examples, but I'll
Okay, it's
just
just
give
for
the
everybody
guidelines
else that's
before.
watching as well, because they
Yeah,
may
man, I'll be
a lot
showing
of
the
our
guidelines.
followers may not know like the moving averages and stuff like that, how it actually looks on a chart. So
Yeah, and locally we don't talk about moving averages enough.
it's not on
Yeah,
JTrader, it's
I don't
not
think
on.
JSC allows you to see it.
Yeah, yeah,
Yeah, you have to calculate moving averages.
yeah.
Locally, which is
When
really
the
what it
market
is.
gets a bit more sophisticated, I guess. I don't know.
Yeah, but we'll get into that. And then what we also need to look for is the fact that it shows abnormal spikes in volumes traded, which coincide with the bell shape.
Mm.
So the bell shape is normally supported by a huge spike that seemingly came out of nowhere, and then that spike will peter out, and then the price also peter out to follow.
Mm.
And we also will see where we we'll also observe where on the relative strength index, the relative strength index tells us if a stock is overbought or oversold. Normally, during a pump, you'll see the stock reaching overbought territory, sometimes in multiple instances. A stock can be overbought without it um, being a pump and dump situation. But I'm just saying all these conditions combined normally follow a pump and dump. So it's all of these boxes being checked at the same time.
Mm.
And lastly, you will see the high, i.e., the highest point over the observed period, the period of observation. The high is more than 70% than the average price, right? So you're seeing all of these things happening. It being overbought, The high is more than 70% of the average price. There are abnormal volumes. The 50-day is shooting above the 200-day and then crashing soon after. And also there's a parabolic shape. So all of these things coinciding is what we're seeing as typical things around a pump and dump. But they can happen without it being a pump and dump. It's just a
Okay.
pattern that we normally see. So we're trying to quantify it and make it more than just, yo, this brother come out of nowhere and I come talk about thing. No, bridging. There's a pattern. So the first graph, we're actually showing Supreme Ventures, which
Okay.
is a stock that is followed, heavily followed on the market. It's a main market stock. And we basically see some momentum around the stock in 2019.
Mm-hmm.
Then it fell sharply because the rest of the market sold off as well during the COVID scare, which was in around March. We
Yeah.
actually started reaching the oversold territory, which is in the green.
So this is
Then,
this at the bottom is the RSI you're saying,
yeah,
and that
man.
green line in 20 March 2020 is where it's oversold because it
Yeah, and
dips
the red
below the
line is
green
where
line.
it's overbought. Yeah.
Okay. Okay.
Um, and then thereafter, we see the stock essentially trading up in a way that is what we call typical, right? You're seeing volumes fairly consistent for the period. There are spikes once in a while, but you don't see this large bell shape in the volumes and the price graph at the same time. So it's not like the volumes just come out of nowhere. Pretty much, you're seeing similar volumes for the most part, and you can see the price action building up in a way that's natural and volumes that are consistent. You're not seeing the volumes just jump up and the price jump up at the same time. So that's SVL. If we even look at the box that shows the price information, the high is $34.67 for the
Mm-hmm.
period, while the average price is 21.21, right? So let's move to something that looks a bit abnormal and looks kind of pumpish. So my first example is I create. So what we notice is that there are a lot of abnormality or abnormal patterns in the volumes, right? It doesn't look like SVL chart because there's large inconsistency around the volume movement. We see it hitting the overbought territory right around where it breached the $4.50 range. The high for the period was $4.90, and the average price was $2.61. So we see that the high is quite a sizable distance from the average price. And we're
Mm-hmm.
seeing where the 50-day moving average is way above the 200, and then it crashes far below the 200. And this is happening over the span of months, right? Um, right before the crash of the 200-day, crash of the 50-day below the 200 in September thereabout, there's a huge spike in volumes, and we're seeing these long candlesticks, right? Which shows that there's a big disparity between who's selling and who's buying, and that's where the gains are made. This is where people are basically calling themselves geniuses. So let's look at another example. All
Mm-hmm.
right, I have Siboney as my next example. Um, if we were to look at the March period of 2021, we see the stock moving way above the $2 range, past the $2.50. Um, sorry, yeah, way above the $2 range. The high is $2.30, and the average price is actually 52 cents. So we notice that's a very big gap. Maybe not numerically, but if you were to calculate it in percentage terms as multiples, right?
Mm-hmm.
And in terms of the volumes are not consistent. You normally have these huge spikes which send up the price and then a crash. And that happens repeatedly over the period of observation. So these are the things we talk about when we're talking about pumps and what they can look like. You see the 50-day shooting above the 200-day and then a crash thereafter. And it happens about 3 times in this graph. So those are some of the things that we can look for, as I mentioned in the guidelines. The next example on the other slide is key insurance.
Mm-hmm.
Um, Around 2020, right, between March and June, we're seeing the stock reaching far into overbought territory on the relative strength index graph. You're seeing the 50-day shoot far above the 200-day, The 50 day is a pink line, by the way, and the 200 day is a yellow line. Um, the high is $11.42, and the average price is $4.65. Again, that's a move in terms of multiples, right? That kind of price action is not really common. Um, Normally, there is a catalyst that causes type of price move, or a turning point, and sometimes that turning point is somebody talking it up. If you look at the volumes, again, the volumes are very inconsistent. Um, so pretty much, we're starting to see a pattern emerge. And again, it's the satisfaction of more than one criteria that we would really look at to say, okay, this kind of looks weird. It's not one or the other. Because again, something can become overbought, or the 50 day can move far above the 200 day, but it doesn't necessarily make something a pump. But when you see all of these things coinciding, then it causes people to be curious as to what the reason could be.
I
Um,
understand.
yeah.
Okay.
The next example is actually not on JSE. It's GameStop. So
Ah.
GameStop saw volumes peak significantly in January 2021. The high for the period was $120.75, while the average price was $27. So again, that's a move in terms of multiples in a fairly
Mm-hmm.
short space of time. We're seeing the 50 day shoot far above the 200 day, but we noticed that the rally lasted for quite a bit of time. The volumes are a bit lumpy, but as it relates to the total observation period, right? Um, those peaks in terms of the volumes were not sustained, meaning that those volumes basically came out of nowhere because the volumes would have been much lower for most of the observation period. So it means that there's something that happened that was out of the norm, and the move was not sustained, which is why the price is way above the high. The distance between the high and the average price is so large, I should say.
Mm.
The next example is AMC, right? For most of the period, both the price action and the volumes are flat until March 2021, when there's a huge spike. And then in June 2021, there's another spike where it goes deeper into overbought territory. The 50 day moves even further above the 200 day, followed by a crash towards the end of the year. And again, the volumes are spiking and essentially coming out of nowhere. So AMC is a movie theater, and during the period, theaters essentially saw a huge fall off in patronage. And to be in line with this, the financial performance would have fallen off significantly in terms of profits. But the price, as you can see, it moved significantly. The high was $45, and
Mm-hmm.
the average price was $9.35. Again, this is a move in terms of multiples. This is almost a five x move, right?
True. Yeah.
Next example is Dogecoin. We're seeing the 50 day moving average, but no 200 day, because as at the time of this observation, we didn't have 200 trading sessions. But we saw where it was overbought um, in October 2022, um, and we saw the high for the period being 15 cents, while the average price was 8 cents. So this one isn't as extreme as an example, but this is something that saw a move that seemingly didn't make sense. If you look at these large candles,
Mm-hmm.
it shows a big discrepancy between buyers and sellers. Um, and then lastly, we have XRP, which is Ripple. Um, Again, as we notice, all these securities would have traded differently, but they have similarities that overlap. And they are on different markets, but what's similar is that you have the 50 day shooting above the 200 day repeatedly, it going into overbought territory repeatedly. The high was $1.97, while the average price was 57 cents. So that's a move in terms of multiples. So it's not random. A lot of these unrelated securities have similarities around them, and what they have in common is that, there was a pump followed by a crash. So the next slide is that, the SEC speaks
Mm-hmm.
on pump and dumps, and they're saying in a pump and dump scheme, fraudsters typically spread false or misleading information to create a buying frenzy that will pump up the price of a stock and then dump shares of the stock by selling their own shares at the inflated price. Once the fraudsters dump their shares and stop hyping the stock price typically falls and investors lose money. False or misleading information about a company's stock price may be spread through sources including social media, investment research websites, investment newsletters, online advertisements, email, internet chat rooms, which includes things like WhatsApp and Telegram, direct mail, newspapers, magazines, and radio. Microcap companies are particularly vulnerable to pump and dump schemes because there's often limited publicly available information about microcap companies. That's the SEC. Now, in the more local context, FSC on pump and dumps. Persons, here I'm going to read from the Securities Act. Persons are also prohibited from false trading and market rigging transactions, stock market manipulation, making false and misleading statements, fraudulently inducing persons to deal in securities, or inducing purchase or sale dissemination of information regarding the rise or fall of an investment product, and employment of manipulative and deceptive devices in accordance with sections 44 to 49 of the Securities Act. Then we have pump and dumps in action again. Cases include Dogecoin, Shiba, GameStop, and Siboney. Um, and the major theme of Wolf of Wall Street is actually pump and dumps. So I actually have a clip from Wolf of Wall Street that I wanted to show. But the summary of pump and dumps is that pump and dumps are a type of securities fraud. In the US, the Securities Act of 1933 and the Securities Exchange Act of 1934, Rule 10b, as well as Investment Advisor Act of 1940, all address these types of violations. In Jamaica, according to the FSC guidelines from 2022, the Securities Act sections 44 to 49 speak to market manipulation. Pump and dumps create what we call false markets, and pump and dumps have similar patterns but are not all exact in how they play out. And the sources I used were FSC, the SEC website, as well as the Bloomberg terminal. And I really want to play this clip from Wolf of Wall Street, so I don't know how we're going to do that.
I mean, we can leave the clip in the
Yeah, can I see the
description, or
link?
we can,
I have the link.
yeah,
All right, I'm going to
yeah,
send the link in. I'm going to send the link in the chat.
Yeah.
yeah,
Let's share that with you.
Oh yeah, I
yeah, we'll
think I
do.
know this clip too. This one where he's selling the. That was a
Yeah,
good movie, yo.
yeah, that's a great
That was
movie.
a good movie.
Yeah,
Yeah, this was a good presentation, bro.
yeah,
Bless,
man.
bless.
Thanks. I just
I know a
wanted
lot of
to
people
make it a bit
appreciate it.
structured. Yeah, I
Yeah.
just want to make it structured so it's not a talking thing where, oh, yo, that brother you just bad mind. Like, why would I be bad mind? Think about that. Like, that doesn't make any sense, really.